We got a little bit different episode today. I'm going to be just chatting back and forth with my friend Andrew. Both of us were in another mastermind. He's an entrepreneur himself. We're going to be getting into a little bit of his business, but I would say about a third of our clients are business owners. Really, you're never going to get to multiple millions, $5, $10 million plus by the age 50 unless you own your own business. Unless you're a doctor that makes maybe $600,000 and your spouse is also a doctor too, it's just not mathematically possible. Right. Today, what we're noticing, a lot of our clients are folks that have crossed over the rainbow in a way and sold their company for 5 mil plus. But I thought I'd bring Andrew, still in the trenches today, running his successful consulting business. But Andrew, thanks for jumping on, man.
Thanks for having me, Lane. I've been going to that mastermind group, and every year your book is passed out. And on the airplane home about 2 years ago, I read it. So been a big fan of everything you do.
Yeah, I go to two types of events. Like this group, I learn a lot of more
profitable. I like to say they're profitable companies. So profitable business founders that care about like family and wholesomeness. I call it holistic entrepreneurship, like both family and business, where they're not venture backed. They're not chasing dreams of $100 million exits. They're chasing how to build like a good, solid digital business.
What I've noticed, like you find good people and you stick with them. And it also is cool when you're very in non-competitive environments too, where somebody does something completely different than when you are. But take us back to when you're probably working at a day job, what you do, and then how did you start your business?
Sure. So I graduated school in '08 and I immediately I was a mechanical engineer. And so when you're a mechanical engineer, you kind of have the option to work on cars or vehicles that move. And I was lucky to be in Connecticut, which is the heartbeat of the government's defense mechanism or systems that they build. So there's airplanes, there's submarines, there's elevators, there's helicopters. All those corporations are down in that Connecticut band. So I ended up working on nuclear submarines for 6 years of my life, from 2008 to 2014. And while I was in that job, I was an intrapreneur. My first job was working on the hovering pump, which was balancing when a submarine is positioned in the ocean. It keeps it still so that the waves and the motion of the ocean doesn't actually change the direction of the submarine itself. And very quickly, I think they recognized me and I recognized I was pretty bored. And so I started creating opportunities for myself inside the business. I like to call myself an intrapreneur. It's a word that I've read a few times across the internet of somebody that has this entrepreneurial spirit, but is stuck inside of a business. I had to present the same thing 20 times to the same people to get an idea that no one really wanted to do in supply chain, but had immediate returns. Like the ROI was basically 3 months, $100,000 immediate returns. And it was a Bluetooth chip that we put into supply chain that basically tracked parts in a supply chain management system for nuclear parts. Amazingly, you'd be surprised, these parts are sometimes the size of cars and they lose them. They don't know where they place them. They don't know where they put them in the shop. And so we put these Bluetooth chips on these giant valves and isolation valves and these huge components for nuclear plants and nuclear submarines. And we were able to find and we were able to locate them. And we got 3 patents in the United States for it. And my name's on the patent, but I don't own it. And so I was like struggling to try to figure out how to deploy this at a more massive scale because I'm an entrepreneur stuck inside of a company moving at a snail's pace. And so they sent me around the world and I started installing this system into France and in London and Scotland and the United States. And sometimes it worked, sometimes it didn't. But I was like, can I just try the commercial world? You guys are slowly moving this out. Can I go sell it to my own industry? And so they gave me permission to go out to the world to start selling an idea from their patent that they had. And I thought it was a great idea. If 2 people shook hands, they could interact information between those 2 people using the same technology that I had invented of tracking the Bluetooth chips. So we started a business card company and that ended up having 600,000 users. And I was able to separate my day job in 2016 and work full time on my startup, which it was called Inigo, and somebody purchased it in 2016. So that's how I became an entrepreneur, used my talents as an entrepreneur, got discovered by the company to use those talents as an entrepreneur outside the company with permission, and then did my own thing. And then slowly I turned my day job into my full-time job.
Yeah. And I think what a lot of people don't realize, like a lot of entrepreneurs, a lot of them fail, right? Obviously, but even the successful ones go in and out of businesses pretty frequently. Your case too, right?
Yeah. I've had 14 businesses. So since that 2016, we thought we were really good at building companies because our first one was a major hit. And we went through 14 businesses. Right now we have 923, which is a consulting agency, very successful, but the other 10 were not. And we failed a bunch and we struck out a lot and we learned a lot of lessons. But in 2018, I would say that was the time when I pretty much went bankrupt, ran out of money. and had to rediscover myself. And those are hard times. Those are hard times with a wife and having a 1-year-old and a mortgage that falls through. And yeah, it's fun, but we bounce back and we know how to do it. And now we feel kind of a little shield of armor on us that we build every time that happens.
And that's why it's tough to hang out with non-entrepreneurs and
Yeah.
we have to pay money to see each other.
100% true.
Yeah.
100% true. You find it, I call them humans and entrepreneurs because we're separate. We're like the monkeys evolving to humans. We've evolved to the species that it just doesn't make sense.
Yeah. Yeah. That's what entrepreneurship is like, the ability, or maybe it's out of stupidity, but
Yeah.
you risk everything on yourself. And at the same time, it's still investing, right? Everybody who's listening is an investor to some
Mhm.
extent. Some may not want to risk everything on themselves, but may want to throw a little bit of money to a real estate deal or a rental property, things like that. So maybe take us to, so you were working for like at least a handful of years, right? Just a W-2 guy.
Yeah. 8 years total. Yeah. From 2008 to 2016.
Yeah, I'm sure you read that purple book, right? That says in very many words, essentially go buy assets, right, or real
Yeah.
estate.
You're talking about Rich Dad Poor Dad?
Yeah,
Yeah. Yeah.
yeah. Obviously, you had that kind of in your head, right? Makes a lot of sense. In those earlier years, right, when you're at the tail end of your traditional career, like how did you internalize that sage advice?
Yeah, unfortunately, that was also the book that made me realize I'm not a huge fan of that book now, but I was never taught these skills. Never was around business owners. I didn't know that I could be a business owner, but I also knew that there was something weird about me. I never had friends in high school. I was bullied a lot. And so I had this trauma that I had just carried with me throughout high school, throughout middle school. And like I've tried to remember those times and I just can't. And so as you become an adult, I loved playing with Legos. I loved playing with Connects. I loved building things. And so when I was stuck in these W-2 jobs, I was bored because I was trying to express myself and no one was interested in what my expressions were because everyone that's a W-2 job wants to stay boxed into their position or they want to play the political game and kind of move up the hierarchy chain because they can play that political game. And I just wanted to build. And so as a human that just feels different than everyone else that's there, I needed to find my people. And I never knew how to do that. It took me 5 years to go through my own journey of learning about myself, figuring out who I really wanted to be, getting a business coach that figured out also with me along this journey of what I'm good at, what I'm not good at, how am I as a leader, how am I as teaching people, but also the jump from a W-2 job to an entrepreneurship and going on your own. You need a good wife. You need a good foundation. You need someone that believes in you and can trust you and know that like you're not going to mess this up fully, but also you're going to be responsible enough to like not ruin the family too. So all those things came together for me from 2016 to 2018 when I lost all the money and had to figure out how to bounce back from that. It's a journey of transitioning, but like you can read the books, but until you do it and come out of it, that's when the people that write the books actually can write about it. And you can't learn it until you like go through it. It's like a rite of passage for us. Because every time you get in these groups, you all meet each other and everyone has this like little bit of trauma that they can talk about. And you realize that we've all been through this bankruptcy or horrible scenarios or horrible upbringing of whatever happened to them to get them to the point where they don't fear risk. And because we don't fear risk, we can do those crazy things. But yeah, that book was like my transition point too.
Yeah. So, I mean, you mentioned that I guess you're a typical engineer then, right? Just a
Yeah.
good worker bee. Did you have like parents who are a little bit more socially extroverted to say, hey, Andrew, I think you need to stop just working on the stuff and need to do more networking or social things. Did you have that outside influence?
I did not. I didn't have any knowledge of entrepreneurship. Even through my first company, I knew about the groups, but throughout my childhood, I didn't know any business owners. I didn't have any parental support around being an entrepreneur. My parents specifically told me to stay in W-2 jobs because that's where the healthcare is, that's where the support is. And so even becoming an entrepreneur separated me from the concept of support that I had built through my childhood. And so I had to completely reinvent my support structure. And that's a hard thing to do. You have to find people that you trust and can believe in, but also are looking out for you as well. And yeah, I really had to reinvent that as well at the same time.
Yeah, I think the story of an entrepreneur, so many different terms, but I think all the entrepreneurs out there, business owners or C-suite people can definitely relate to the ups and downs. But going when you're starting the earlier businesses, take us through like financially what you were thinking. Were you also doing the 401k too at the same time, or part of it is like you didn't have too much money too. So where was your headset at that time financially?
Yeah, so I had $50,000 in a 401k, and that became this like nest egg that I always knew was money, right? But you can't access 401ks easily. And so I remember that through the W-2 jobs, everyone tells you to invest in your 401k and they match your 401k. And so I had grown that over the 8 years to $50,000, which is considerable, right? I invested mostly in the stock of General Dynamics, which is the nuclear submarine company. And so when I left in 2016, I didn't have a 401k anymore. I didn't have any money going in, but also I needed to use all the money for myself. From 2016 to 2019, I did not invest in the stock market. I took my money out of the 401k and just kept it in cash because I never wanted it to go down. But I also didn't believe in the politics at the time. And I was like, I don't know what's going to happen. I can't lose this money because this is like my support system. So I just put it into cash and I left it there for 3 years, which I regret, but also like it was my safety blanket that would save me. Come to find out in 2018, I lost my mortgage because the transactions that I was going through, they found some things out about the payment gateway that I was working with and they cut my mortgage off. And so when that happened, like my wife and I you can take 50% of your 401k as cash. And we were able to buy our house that we live in now with that extra money. But I didn't invest anything outside of that until 2019, 2020, when I started to finally get cash flow, like for the first time in my life, like cash flow from a business that I had started. And that was in 2019. And we went quickly from 0 to 2 million from 2019 to 2020 as an agency. Like we were just built for other people. And that was the first time that like I saw real money like in my life.
Yeah. So all this whole entire time, no outside investments, just plowing everything into your own business and
Yeah.
just gambling on yourself,
Yeah,
essentially.
you're basically like every cash you get at that point, you're putting into your business. And so the agency that we speak of and that I work in now, it started in 2016 because I started consulting for as many people as I could. And bless him, my co-founder was along for the ride this whole time. We would just go into businesses and ask them about AI projects, ask them about building mobile apps. And then we were in the wrong rooms a lot of times, but they still picked us and said, can you do that? And so $20 here, $100 here, $40 an hour, whatever we could get, we started collecting and bringing that in. So like our consulting journey started right there in 2016 of building for other people. And for us, I always say like building a startup is money later. When you're a consultant, you get money now. And that was the unlock, I think, that we realized that consulting can pay really well. And also we're really good at it because we actually appreciate helping people. And so all these products and ideas that we had that we wanted to build was not going to be as fruitful as just doubling down on building for other people that give you cash right away. And so I think that mix in 2016 to 2018, we ran out of money and like we still realized that I could still sell my services to get money back. And that just kept doubling down until today.
Yeah, I mean, it's something that, like, for us, when interest rates shot up, that's how we primarily made money by doing deals. When we stopped doing deals, we need to look for other forms of income. And like you said, the professional services is another way. And I wouldn't say it's necessarily a recession kind of proof industry, but I think what you're trying to look for as a business owner is different lines of revenue that are counter cyclical. Like the super archaic example is like a car dealership, right? They sell new cars, and good times people buy new cars, and bad times people buy used cars. They have the mechanic facility, they fix their cars.
Yeah.
I think that's so it always seems like business owners, like the people who have the professional services company, get jealous of the new shiny product selling guys and vice versa.
I think the dangerous trap that I fell into and a lot of people fall into is that the people on Twitter that build these products and they get $100,000 of MRR very quickly. They've built hundreds of products. Like Levels.io, he has a spreadsheet that has hundreds and hundreds of hundreds of products that he's built over time. And yeah, a certain amount of them have made millions of dollars. But the sheer effort he's put in to all of those products is massive. And I don't think we all realize that building a successful product takes a lot of time and a lot of at-bats. And we want the shortcut. We want that Bitcoin price to jump up immediately as soon as we invest, or that stock to double the week we invest. As you get older, and as I've gotten older, compound interest is like a real thing. And I've learned that like every dollar that I make is $5 in 5 years. And that becomes harder to save because like you don't see it right away. But after it starts happening, you realize my whole job for my family, for myself, for me, is to collect the money that I make at the agency and put it into a brokerage and let that grow, not put it in stock markets, not buy another company, not try to learn real estate or how to trade on the stock market. If I do those things, I'm taking every hour away from making money for my agency. And every hour I can make for my agency has a 35% IRR, 50% IRR, way higher than anything I could learn and try to get into right today. So I have learned that if I have extra money, I should put that into the agency. I should help people at my agency do better in their job. I invest in a department that can expand in my agency because that compounded is way more beneficial for the people that I work with, for the clients that I work with, for my lifestyle. It compounds. And it's really hard to tell somebody that doesn't know that it's possible.
Yeah. It essentially comes down to where you're going to get the most ROI. Or another way of looking at it is where you're putting your time, because that's also a resource and that you're getting the most hourly rate. For some folks out there, maybe you're a doctor, that's probably going to be the best bang for your buck than dicking around with a short-term rental.
Yeah.
That again doesn't do very well in recessions when times are tough. That's my little jab at short-term rentals in case
Yeah.
I'll slip that in there. But
Or when the water leaks on the couch or the tenant wants a new keypad and you got to run up there on a Thursday afternoon and call someone because instead of treating a patient, you're now like dealing with a key issue at your short-term rental. Like those things you don't think of until it happens. Then you realize, I just want to be a doctor. That's where I'm making my money to pay for the short-term rental.
when things get fuzzy is on the other side extremes, and then you start to work your way up, like a guy that makes $50,000 a year, then it makes a little bit more sense to do those types of things or flip some houses or start a business. It's always the smoothie king, right? It's always the franchise smoothie king is always a good starter business that a lot of people they start with that, but then they grow their assets from there. But yeah, so maybe I think the next genesis, you mentioned it a little while ago, is like at some point, all your hard work started to grow, right? Just like a doctor who goes to school for damn near 20 years and finally makes some decent money, right? You hit that hockey stick. I guess at that point, financially, are you still putting $1 for every $3 you profit in the business, or kind of where's your head at these days? And maybe get a little bit into taxes too.
Yeah, sure. So there's three buckets in most businesses. And I think this is true with product businesses as well, but it's been a while since I've ran it. It's been 5 years. You have your receivables, which is sometimes loaded up with a bunch of receivables of people that are unpaid or not paying on time. And you also have just long terms, right? You could have 30-day terms, 90-day terms, but ours can be in the hundreds of thousands of dollars at any time. And I think that's important. I'm going to come back to why receivables are so important. You also have your cash in the business, which obviously is for a rainy day, but you also need to balance it against working capital. So we do 2.5 months of working capital of cash in the business at any time. So whatever we have to pay our team in a month, multiply that.
Do you keep that in any particular place? Because I've always like personally that type of stuff where like payroll, right? Like the very necessity things, infinite banking, like people's life insurance, to use that as your overfunded portion for nice little yield there, off the table litigators for the most part, but nice place where you can get a little yield out of, as opposed to you hear people putting into crypto these days. I don't know.
Oh yeah, no, we don't do that. My co-founder, he's a bit risk adverse, so he would not allow that. But we put it into, we have a program we call, is a banking system called Mercury. And so all of our cash that's sitting idle is in a treasury, which is just a drag and drop from my checking account. So the money goes into the treasury and then it comes out of the treasury on the 30th of the month. And then whatever's left over goes back into the treasury. So we made 5.5% for a while. Now it's about 4.25% on any money that gets stored there.
So that's like a business checking account then, or like
it's a business checking account. The other great thing about Mercury too is I have 40 credit cards now. So whenever we sign up for a subscription or especially Google ads, we put a cap on the credit card and a vendor lock to Google so that Google can never spend more money than I give it. Even if my marketing manager wants to put like more in, he can't. It's the credit card that's associated to it is controlled by Mercury, not the vendor. So Mercury's a good little platform for that.
Yeah, cool. Like I've seen it's not like I've seen like Bluevine, that's a business checking account.
Yep.
But here it is. So this is it a bank, or they're a fintech company, not an FDI insured bank, but they usually run through another bank, right?
They do. Ours is called Choice Financial Group. So when we send our invoices, it goes through Choice Financial Group. They are not FDIC, but they split it up in less than $250,000 increments. So if anything was to happen, you can still recover. They also, there's a bunch of features, but yeah, we really enjoy working inside of that for our money.
Cool. Yeah, not financial advice, just two guys talking here, guys. Do your own due diligence.
Yeah.
The one thing that you mentioned can be done at a lot of banks, that like what you're alluding to, like that's what's known as like a sweep account.
That's right. That's exactly right. They have a treasury built into this, and there are 3 money markets that you can invest in. They're just yield, and ours is JP Morgan, but it's a 4.25% return on any cash that you put in there, and it returns monthly. So like we make a few $1,000s a month just from idle cash.
Yeah. So just a little bit understanding of how the banking world works. If you work with one of the top banks, they're not going to give you that stuff. If you ask for it and you're a big enough client, you maybe have multi six figures with them just sitting around, they might do it for you, but the big banks will just laugh at your face.
That's true.
But yeah, that's where there's this dissidence between the huge banks and these tech solutions like Mercury. And then like the credit cards, you just flip on the switch and it makes you a new credit card at will, or is
Every
that
time. Yeah,
off?
you type in the name of the person that works at your company, send them an email, pick the vendor you want to lock it to, or you give them a limit on a day. Or like sometimes they're traveling and someone's like, "Hey, I'm trying to get an Uber." And I'm like, "Yeah, here's your credit card, just put it on that."
Okay.
So that's the second bucket, right? So the third bucket is your personal. Like as an owner, you are extracting money from the business and you do that in two ways. And I don't know how deep you want to get into it, but you have your owner's draw and then you also have your W-2. So you pay yourself a salary and that gets taxed. And then you have your owner's draw that comes out separate of it. But in my mind, I have those three buckets because it's really important for rainy days. Like how am I alleviating risk? So the first one is in the business, because I have receivables sometimes in the hundreds of thousands, close to a million, I can get a HELOC on my receivables, which means I can get up to $500,000 of cash that I can use, regardless of if my receivables go below $500,000, that I can use for my business that is doubling up my rainy day funds. It sits there. I don't have to touch it. I don't have to use it. But when I do use it, the interest rate's somewhere around prime, if I remember correctly.
Who is giving that to you? Is that Mercury or
Yeah,
different?
so the trick with this one is you can go to a small bank, and I've heard great things. You just go to one of those random named banks in your town, and they'll be great and supportive. However, there's a special division of Chase and Bank of America and all these places. And if you keep calling the right people, entrepreneurs have figured it out. I know a guy in New Hampshire. He is a Bank of America associate, and he basically have given me this ability to do small banking type things like this for Bank of America because they have the ability to do that. They just don't have the communication. So he has clients like me, all entrepreneurs, and I call him all the time. He calls me about my life and my kids and all that, checks in with me, and we just do random banking things just like a local bank would. So you can do it with Bank of America.
Yeah. So essentially what's going on here is that line of credit. Yeah, you have to pay interest on it. For
Yeah,
business owners know that not tying up huge wads of cash
that's right.
for that one-time fee when you need it is a lot more valuable. And this is again what separates regular people from entrepreneurs. The regular individuals freaked out about 5 to 7%, where the
Hmm.
business owners, I'll pay 10 or 12, whatever,
Yeah.
for this minimal amount of time.
Yeah.
So yeah,
Yeah. You don't even think about the interest rate at that point because I can float that cash into the treasury. Let's say I bring that cash out and I already had cash in my treasury. Sometimes it's even worth it to play the arbitrage game. And knowing that the interest rate in my brokerage account is going to be higher than the money that is coming out of my business, I can just send it to the brokerage account to make 10% return and take a 4 or 7% hit on the interest rate for that day and still make a 3% spread. So it's all a game, and you just got to play that game of like where the money and the percentages are.
yeah. It's easier when you're in control of the cards, right?
Yes.
But I
Yes.
think again, some people are totally freaked out about that.
Yes.
But that would say that's true confidence, I believe. When it's essentially what the entrepreneur is doing is they're betting on themselves because they know if they sell lemonade at $5 a glass and they know their costs are $1, they know they're good for that $4 of profit. It's just not here
Eventually.
yet. Eventually, maybe if it doesn't
Yeah.
rain, a lot of things could happen.
Yeah.
But they're confident in that they'll be willing to pay $2 for the cup
That's
for
right.
if it increases.
I think it's like the uncomfortable conversation too. If that person doesn't pay for the lemonade, I'm willing to send that email and saying, dude, do you want me to drive there? Do you want me to call there? I'm going to call you every day until you pay. That's the part that I think entrepreneurs have as well that not everyone has because otherwise you never get the money.
Also, again, me just beating up the professional services guy, you guys have the ability to ring the towel when you need to,
Yeah.
as opposed to what do they call these kind of businesses where like they buy $1 million of clothing and they're stuck with the damn thing. I guess more like physical products, right? Where you have to
Yeah.
buy inventory. With professional
Oh,
services,
FBA.
there is no inventory other than you got to float these guys' salaries, which oftentimes work manpower is your biggest expense too.
Yeah.
But yeah, it's different types of risk.
Yeah.
There's risk in everything out there.
Yeah. Yeah. I agree. So the third bucket then is your brokerage. So you have the ability when you take money out to use it. For a long time, I did because I didn't have enough money on the top end. But then you start sending money to a brokerage, and that's where you start seeing tax savings. You start figuring out how to put money in certain places so that tax is not a thing, and you try to balance it with some purchases, and you use your HELOCs and all those other levers that you have, your personal HELOCs, to play that game of like, how much cash should I take into the business and out of the business and put into the brokerage. But so you have those three buckets. And I think the important thing is the HELOC on the business is a safety net. The treasury and all that stuff is growing, but you have a safety net on the HELOC on the receivables. You have your cash pile that you have in the business, and you have your cash pile outside the business that is also growing, that can always come back into the business if needed on a rainy day. So you have these like pools that you can think about.
So you mentioned that the HELOC, right? In case of a rainy day, how do you think about how much money you keep on hand or ability to draw on there? Like a certain amount of months of if income went to zero for X amount of months, like what's your logic for that
If the
amount that you need?
HELOC runs out, or when to tap into the HELOC, you get as big as possible because you don't have to touch it. So whenever you get a HELOC, in my opinion, at least, like the easiest one to think about is like a house HELOC. Let's say you have a $500,000 house. They'll give you up to 80% of the leftover. If your mortgage is at zero, you can get $480,000 on a HELOC, whatever 80% is. I didn't do that math correctly. But let's say you have a $250,000 mortgage, they won't give you $250,000 of the leftover. They'll give you 80% of that $250,000. And you should take it all, because if you don't touch it, there's no charge, especially with a bank HELOC. If you set it up the right way, like there's no interest, there's no penalty, there's no prepayment. Like you can just leave it there for 10 years and not use it and not pay anything for it. And then on the day that you take it out, that's when you pay the interest of how much you took out.
Yeah. So 80% on a house, but what about like a operating business, like your monthly receivables? Is there a certain
Same.
rule of thumb on that?
They did 80% of our receivables in a 3-month average from prior to the date that we started the HELOC on. So they took 3 months on average. They looked at our business for like 2 years and probably made sure it's consistent and like we weren't growing or shrinking. But then they say the average of 3 months becomes your 80% of the average of 3 months becomes your HELOC value, your premium.
Yeah. And 80% of your revenue, that might be enough for most people out there. Some businesses may burn through that pretty quickly, right? You know, another pandemic or the next big thing that happens that shuts people down for 2 or 3 months. Do you ever think about it from that perspective of if something big were to happen, catastrophic, that I had no revenue for X amount of months, how long would my line of credit last me? Or
Yeah, so like the Ukraine war, Section 174,
Paris for a
COVID.
lot of folks?
Yeah, like we've been through that. And when Ukraine war happened, we had $160,000 of debt, like immediately, like overnight, because we paid everyone right away. And we said, go figure out how to be safe, and we're going to pay you through this. Don't worry about working, but we'll find developers. So we found $160,000 worth of people and floated that like ourselves for 7 weeks. When that happened, the things that people don't mention, they always think of the zero effect, just like you did in your precursor to this conversation of going from like having revenue to not having revenue. But if you draw a linear scale from that, you'll reduce it over time and you will start seeing the downward trend. But you're not going from, let's say, I don't know, $40,000 of profit to $20,000 of profit to $10,000 of profit. You're not going 40 to zero overnight. And so that buffer allows you to pull from the HELOC buffers to keep you at a level that's like sustainable. And maybe you use $5,000 the first month, $10,000 the second month, $50,000 the third month. You are seeing a dip, but you also know that you can recover, and you start to get confidence that you can recover when you see the $50,000 going to 40 to 30 to 20 to 10. And as that happens, especially on the ramp back up, now you're starting to think, you're playing the interest rate game. I don't want to pay the money on the HELOC now. Maybe I can get an invoice early from this customer and pay off all of my debt, because I'm going to trust this next customer that pays pretty consistently is going to have money coming in before I have to pay my developers. And you're just doing the math game at that point on your way back up. But on your way down, you're just trying to collect the money as necessary to support the sinking ship. But you're also trying to keep everything floating so that you can come back up in the future without having to fire people. And so that's the game you're playing, is what are my most important assets? How do I maintain that? And then the money is just a vehicle. If you're not worried about interest rate, like I'd pay $10,000 right now to not ever have to worry about sinking ship. So that $10,000 is just a sunk cost of paying an accountant or paying a tax person, right? I'm going to spend $10,000 on something stupid this year. Why not spend it on like the comfort of an interest rate of money that's going to support me through this dip, because I'm going to trust in myself on the way up.
Yeah, it's this concept of riding a motorcycle. You're cruising down the highway at huge speeds, balancing on two wheels. But that's what we're talking about here, like
Yeah.
using debt. We're
Yeah.
not like, I guess maybe this is why the United States goes into huge debt. Maybe they know something that we don't. But I also think that their debt service payments are getting out of control. But there's a healthy amount of lean to this motorcycle or like debt where maybe you're at 20%. I think that's a safe margin, right? Like you could probably just always be owing something. And if you get to the point where you owe nothing or you paid off your line of credit, in a way, it's like, I'm not saying this is everybody. And right now, maybe we've lost maybe a third of the people out there and we will lose them forever. The question to ask is maybe there's something I could be using my money for to expand the business. I
That's right.
shouldn't be completely paid off on my line.
That's right. It's really hard that there's good debt and bad debt, and you grow up your whole life thinking pay off your credit card to never have debt. And like I agree, like not all my credit cards are 100% paid off because that's bad debt, 20% interest rates. I'm always going to pay my credit cards. But there's good debt. Like I can take money off a HELOC. I'm really after tax savings of using money for my primary home. You're looking at like 4% interest rate. So if I have $100,000 and I wanted to put some into the brokerage, or I wanted to use the money for a house improvement project, it is advantageous for my net worth in 5 years that I use 100% of the money from the HELOC and put $100,000 into the brokerage. And that math is really hard for people to comprehend that they're going to assume an interest rate of $100,000 that they don't have into a project for their house instead of taking the cash they already have. But as soon as you invest that cash into the brokerage and that grows at 5 to 10%, and you're beating the margin of the interest rate that is on the HELOC, you're winning in the long run. And that's really hard to teach and understand. And it takes me even a hard time to explain it because like I see it and I've done it, but like it's really hard to convince somebody else that's a good idea.
Yeah, yeah, until you find your gang of other motorcycle.
And then they
Uh,
like give you a picture and a map and they're like, yeah, like this is how you do it. I'm like, okay, all right, I'm not the only fool here. Like the math worked out in my head. Now I'm seeing it can work out in real life.
yeah, another like thing I've seen that people do is they just look at it very rudimentary from like a 6 month to 12-month time frame, and they just take a dotted plot of their line of credit. And if it's going up or drastically, if it stays in a control chart band, they're
Yeah.
totally fine with that.
Yeah.
I used to be an industrial engineer, so we do a lot of these control charts. But that's another way of looking at it too. But yeah, there's no normal, right? I don't know. I feel like going 80% or more on your line is a little dangerous. I
Oh,
just
like
feel
using it
that
all.
way. Yeah,
No, you can, so you can take 80% out, but you don't have to use the cash. I do not
yeah,
recommend using 100% of the cash of what you take out of your, whether it's a HELOC for
yeah.
the business or a HELOC for your personal. Like that's dangerous. But taking the amount out so that you have the ability to take that out, like why not? I might as well cap that number in there as much as possible. So if I ever need it on a rainy day, the maximum's already in there.
Yeah, no, you're adding another level of detail to this concept. I'm just trying to keep it simple of either using it and paying bills with it. But yeah, you're also bringing up this aspect of this intermediary step of taking the funds out of the line and just
Yeah, yeah,
holding it in
exactly.
place, maybe putting it into your money market at 5%.
That's a dangerous game. That if you
Yeah.
can pull that, the arbitrage of the like last 10 years was if everyone in like got the 2% mortgage and then pulled off a HELOC of getting extra cash. And now when the yields were at 5% for just a savings account, you basically take 100% of your HELOC out into a money market, and now you're making 5% on a 2% interest. That's the move of the last 10 years. I just didn't do it.
Yeah, but of course, on financial advice, every situation is different. I think there's a lot of seasonality to businesses too, when you have to make a big purchase and then having the
Yeah.
experience of knowing your revenues up and down certain months also play heavily into this one little aspect that not a lot of people talk about.
No, that's the first time I've talked about it really out loud, even to mastermind groups. Moving money it's a trick, it's a style, and it's hard to forecast. And I think that's the other part is we're really bad as humans at forecasting or predicting when money is hitting its peak or its trough. And people are just not good at that. And so when you try to predict that your business is going to do better or worse than last year, you really have to consider the cash of what happens if it's worse. And that's good forecasting. That's just good planning. And I don't know. That's what I do at least. And I think that's why I'm able to run this business. We've never had a layoff. We've never had an unprofitable month in the last like 14 quarters. So we've done pretty well in that scenario. But I think it's just honestly paying attention to it a lot.
Yeah, yeah. Some would say like a professional services company like yours is mostly just a cash flow machine. Nothing wrong with that. At the end of the day, you're also growing your brand,
Yeah.
grow your business. As you're making money every single month, you've had some big projects, examples of growing your brand, growing your business. But
Sure. So we're an AI studio. We've been building AI products since 2016. Some of the famous products that you might have all used is we're the AI design studio for SimpliSafe. So we help their AI detection monitoring system. And so if you've ever used a SimpliSafe camera, we're the ones behind the mobile app there. Charles Barkley, the chatbot that made fun of Charles Barkley on all the FanDuel commercials for the college basketball playoffs. We built the engine behind that and the conversation that you could have with Charles, and you could make fun of Charles and laugh with him. But we also build products for like consumer reports. We're working on big projects now for 50 to 150 to $250 million companies all over the United States where we build their AI engine, which is a knowledge base to allow them to communicate and chat with their data and getting research or documents or information out of their giant repository of data successfully. And then we train them on how to use it, and then we exit and we see them do great things. Like usually I say it's 6-figure investments to us for 7-figure returns. So SimpliSafe, Consumer Reports, Experian, we're working with FanDuel. Like those have been some of the big projects you might have seen.
yeah, so a long way from the little working for little entrepreneurs, definitely on the
Oh yeah.
enterprise level, which then says at some point, what's your thoughts on exiting? Do you have a like a certain number in your head? And have you talk about these three buckets, right? In the beginning, you make no money going to the brokerage or your personal
Mhm.
side. Maybe tell us a little bit how that has changed and where it's going in the future.
So it's funny when you're in tech, everyone asks you about an exit. But if I was a doctor's office or a lawyer's office or a dentist's office, they wouldn't say, "Hey, you run a great dentist office. When are you exiting?" I plan to run this for a very long time. And so does my co-founder. We're very happy. The projects we have, the clients we have, the teammates we have. If I travel for a week, I miss them. I miss the problems they're trying to solve. I miss the complex like ideas that we can come up with. And we're truly like we're sending products to space. We're changing like commercials and like we're doing really cool stuff. And I get to talk to really great people. So I have no plans to exit. There's nothing in the near future of us trying to use the funds for unlimited growth. We're our own bosses and we're going to go into 2026. And I think we're going to do the same thing. We're going to grow at a standard 20 to 30% rate, keep profit pretty controlled, probably increase COGS again and get really good people into the company and manage that new profit and the new COGS the same way we did this year as a growth lever to really work with great people to help our clients.
Yeah. And from an investor perspective, what Andrew has essentially is like a private equity company, right? It's not like an angel investment where there's no revenue, no proof of concept.
Right.
Obviously, profitable company growing is at a great clip. Maybe not as fast as OpenAI, not many are. It puts the investor in a difficult situation because times are good for you. And it's like buying, like, why would you ever get a good price on a 96% occupied apartment that is
Yeah,
getting top rents and the best tenants? And you
exactly.
always, it has 4 stars on
Yeah.
apartments.com, right? You always get a good deal. That's what cracks me up. People are like, oh, there's 2 stars on apartments.com. So that's exactly why we're freaking buying that,
Yeah,
right?
yeah.
Like,
We need to improve something. Like if we
yeah,
can't improve, we have such good systems. What would they improve in our business? I'm not positive.
yeah.
They'd
Yeah, the
improve the
only
sales guy. That's me. But yeah, the other stuff, our team's so good at that. They don't need to improve it.
Yeah, only place to go downward. You don't realize how many entrepreneurs out there are running very profitable companies like this, but
Yeah.
eventually something happens in health or you age out. I'm sure you've thought about that at some point.
Yeah. My co-founder and I have talked about it, and there's no near-term plans, but you have to do the things like key man insurance. You have to do the things like what happens if I get hit by a bus? How does the shares go to my wife? So you have to do those types of plannings when you own a business that is cash flowing a lot. But then you get to a certain point where you run EOS and you put a great system in place and you eventually find great people to slowly start replacing you. And then you become the principal or the board chairman or something like that, right? So there are ways like the third door option, I would call it, ways for you to still run a business, still be profitable, still see an exit, but not have to sell to a private equity firm and work for them for 3 years, which is probably what I don't want to do. So there's other options. And I think two of them that I just listed of like having the team come in and take over a lot of the responsibility or finding someone where I become the chairman of the board. Those are both viable options, I think, for us in the future, but it's a long ways away.
Yeah. So as far as like owners' contributions to investments in the company, is that still happening these days or is less and less or
Yeah, last year in 2025, right in January, we got together and we said we're going to increase revenue, we're going to increase COGS by a lot, but we're going to keep profit exactly the same. And that's exactly what happened this year. We got really good people into the company and we paid really good money to get them in, but it's totally been worth it. It's been a better place to work. It's been more stable. We've gotten bigger projects because of it. So those are the types of decisions you make of what can I use the profit for? And if you use it on your people, that's going to help us in the long run have less stress, have less worry, have less things on my plate that I have to save on a Saturday night. And so those sometimes paying money for that is worth it.
Yeah. So when I hear that, I hear, at least for this year, that's you're still playing that delayed gratification game, right? You're growing the
Yes.
brand, growing the business because profitability is staying exactly the same. You're probably
Yes.
taking the same exact salary. You mentioned the three partitions. When you really start to ratchet up your brokerage or your owner's take that on that side, right? What's the trigger for you? Because I'm sure you're aware of this, right? Like we always could just stay in this and land, or not land, but just keep the status quo for 5, 10, 20 years, right?
Yeah, yeah.
What do you have some plan or some trigger that when you get to some type of profitability or size that you really start to just now store your nuts in your tree for yourself?
Yeah, I think what I'm really thinking of is I've been running a Monte Carlo now for the last year. And for those who are not familiar with it, Monte Carlo predicts your percent of success of whatever you want to exit at. And my Monte Carlo specifically is at a 72% success rate. So that means I have a little bit to go. I have 28 percentage points to get there before I hit 100% success rate. And so every time you put money into the brokerage, that percentage point ticks up. Not as much as you would think. It takes years, but that is what my target is, getting that 72% to 100%. And that's just going to be compounding both as the money earns on itself in the brokerage and as I invest into the brokerage, it accelerates that. And I think once I get to 100, that's when I'll start feeling comfortable because it'll cover my expenses for the rest of my life.
But the ironic or sad thing about that simulation is to get 100, you could also get there by if you were supposedly going to die tomorrow with $1, it'd be 100.
Good. That's 100% right. 100% right. You
True.
assume the best. You want to see your kids graduate college and get married and all that. You put those life events in there of paying for a wedding, paying for a college, and like what you will be doing in 20 to 30 years. And the more I play with it, the more I put realistic events into it, the more I realize that I still got to earn a pretty good amount of money to get this thing rolling.
Yeah. So how do people set up one of those things on their own to run their own situation through it?
Yeah, the easiest way is you just pay a financial advisor. You can go to H&R Block or any of those places and they ask you a bunch of questions. They link to your bank accounts. But there is a product I use called Origin. It's just a software tool. You do it yourself. It's a lot of work. Like it truly is. You got to link your bank accounts. You got to categorize everything. And now I've had to upload stuff from 5 years ago, which takes a lot of time. But once you do that, it starts using your taxes that you're paying and it uses your burn rate because it starts realizing how much you're spending each month. And then they have a great AI tool that sits over the top of that. You can ask it questions. And so using that tool myself has been better than my wealth advisor because I'd see him every quarter and it would change, but I didn't know why. Now every month I make a purchase and I'm like, that's dropped me a percentage point. Got to reverse that by making money in the business. So I like the real time ability to see your changes every day.
Yeah. So I guess talking to the guy in his early 30s, I guess these are the high income, not wealthy yet guys in tech. Some of these guys I've told maybe don't invest in these deals, put it all in your startup or your business. I don't know if you would echo that, but any other thoughts on maybe a younger self if you would have done it again, just on your personal finances side?
You have a certain expense for your household when you're single, then you have a certain expense for your household when you're married, and you will make it work. As an entrepreneur, we will make sure that the money that's coming in is greater than the money that's going out for almost every entrepreneur I've talked to. The hard part is when you start making excess capital coming in, what you're going to do with that money. Are you going to buy a lot of great things for yourself that you've never had before, or are you going to start investing in yourself? I don't regret any of my purchases. I didn't buy cars. I didn't buy like ridiculous things. I've only had 3 cars since I was 18 years old. And so I spent it on stuff that my family would enjoy, like stuff for the house that like my whole family would enjoy, and safe cars that my whole family would enjoy. But like your expenses will go up as you grow up and your kids get older, and you have to figure out that like your income needs to continue to go up as well. It's a part of life. And so you either need to work in a business where your income's increasing, or as an entrepreneur, you need to figure out how to get that growth so your profit increases. But going back, if I made $100,000 less every year, or I made $40,000 less when I was broke, I wouldn't change it because I would have figured out my lifestyle to balance the expenses that were needed at the time. But you just got to find a great spouse and battle it with you, and you'll make it through.
Yeah, maybe a more of a pragmatic approach would just start off with as little as you can and increase it every 5% every year to count a little inflation in there too. Is that?
Yeah, I don't think we're so rocky. You could go up one month, down another month, like up 5,000, down 30,000, up 7,000, down 45,000, up 80,000, down 4,000. Like it's so rocky. So I would love that plan, but like by the time you see the numbers and you look back, you're like, I'm just a rocky bouncing back and forth of whatever's left over.
Yeah. No, it's good. Like, I mean, a lot of this stuff, you don't really talk to other entrepreneurs or even just regular people. Like we've always said in our group, that's why we have the annual retreat every year.
Yeah.
Until you spend a couple of days with people and you get to know them, what are they investing in? Why are they investing? Why are they
Yeah.
doing that instead of that? You don't start to understand the holistic things. And
Mhm.
most people don't talk about money with their friends or family. Maybe just give a shout out for your company and how you guys can help folks out there.
Sure. So we are an AI studio. Most companies don't know how to build AI products. And so they either have challenged themselves with ChatGPT and tried to figure it out, or they've tried to hire vibe coders or people and haven't been able to install AI with a great return on investment. So we're both a product studio and a consulting service that comes in and teaches companies where their workflows can be automated, how they can be automated, and then we build it for them and teach their engineers how to launch these products. So a lot of the products we build are 3 to 5 months and they cost in the six-figure range, but they return seven figures of usually revenue or cost savings by the time the cycle repeats itself. And so we train ourselves on ROI. We focus on making sure that is being returned at the very beginning. We do 4 weeks of analyzing the result. And if it doesn't work, we quit and tell you that you need another idea or we failed. But if we find some savings, which we do 88% of the time, we go forward and build that project and then we measure ourselves against it. And we're pretty successful at it. And people are seeing great results from the AI products we built.
Other than referrals, how are you guys finding a lot of your clients today? Are you guys doing RFPs or like
No, oh God, RFPs are like the heartbeat of like misery is trying to answer RFPs. A
you
tough
should make an
world.
AI bot that does it for you?
I've tried. But you're up against other AI bots, and then they
Yeah.
get like RFPs now, especially government ones. Like they'll get hundreds of bids, and it's all AI generated, so you're competing. But the Google Ads SEO still is the tried and true tested way for agencies. Get really good at your brand, and then all of a sudden the brand starts bringing in stuff too, which I didn't know until it happened. But yeah, so basically we're a unicorn in our space because we've been around for 10 years. But I think most of our leads come from either Google Ads, SEO, or referrals from people suggesting that we do great work.
Yeah. And then what's your best contact? And then remind me, what was the mascot you did? You were in college
Oh
or
yeah. Yeah, you can contact me on LinkedIn. I write every day. I write on Sunday night and then we post it 7 times a week right on my LinkedIn, so you can follow that. But yeah, when I went to University of Connecticut, I had the opportunity to play for the basketball team at UConn. And so I tried out, made it for a day and was bouncing around there with the team and realized I can't hang with the Division 1 players. So I asked the coach like, "Can I do something else like with the team or travel with the team? Can I help? Can I sit on the bench?" He's like, "You can be the mascot." And I was like, that sounds good to me. So I
yeah.
became the Yukon mascot, which is a giant husky dog that bounced around both basketball and football games from 2005 to 2008.
Who was good back then or who were the guys?
Oh man, you bring me back. So we were the number 1 seed in 2006. It was Hilton Armstrong, Marcus Williams, Rudy Gay, Josh Boone. Those were our starters. And we were the number 1 seed overall in the tournament. So I was the top dog. But we played George Mason in the game before the Final Four. Supposed to blow them out. They were like a 15 seed or 14 seed. We lost in double overtime. And during that game, the mascot passed out, which was me. But yeah, that was a good team, and we should have won it. And that would have been my only Final Four because the woman didn't go to the Final Four all 4 of those years, which is crazy because they
Yeah.
won 9 championships or 10 championships. But yeah, that's my claim to fame is the George Mason game.
Yeah. Sorry you don't have better memories. Maybe one of the guys dunked on you? No?
I pulled Ray Allen's arm during a game. He came as an alumni, and then he turned around and pulled my tail. I boxed George Foreman, which was cool in the suit. He was at a halftime of a football game, and so I tapped him on the shoulder and put up my mitts and
Yeah.
shadow boxed him, which was cool. So there's little interactions like that. I knocked over the Syracuse Orange, and the school was fined for that. So there's like little moments that I can remember that were fun.
Glad you got probably more out of college than most of us out there using in our careers today. But yeah, thanks for jumping on, Andrew. Cool to showcase different investor profiles out there, business owners. Gets a little bit more under the hood on what actually people are really doing out there with their money and how they're thinking holistically with family and their business. But yeah, we'll see you guys on the next episode. Bye.
Thanks for having me, Lane. I appreciate it.